So I did started my crypto journey in the crypto space, wondering the differences between the spot trading and the futures trading. Now in this tutorial guide, I'm going to give you a good concept about how you need to understand what the spot trading is all about and also what the futures trading is all about. Now for the long term, I've come to understand that the spot trading gives you the opportunity to buy an asset. You can buy and hold an asset on the Binance platform and hold these assets until they appreciate in value, where you can now sell these assets for profits. Now, unlike the futures trading, which gives you the opportunity to invest in a particular crypto asset, once you've invested in these crypto assets, you can bid for these crypto assets or invest in them in a bid that whenever they appreciate in value, you can make profit. And also, the good thing is that whenever these assets also depreciate in value, you also make profit. Now, these are one of the major key differences that I like so much about the futures and spot trading in particular. Now, the futures trading gives you, or traders get to buy and sell derivatives or futures contract that represent the value of a specific asset. So now, in this scenario, you can decide to bid. It's more like in the traditional systems where you could bet against the price fluctuations of a particular asset. So this is what happens in the crypto space also. So you can choose a particular crypto asset, like you can see on my screen here. We have Solana against BUSD pair, or whichever pair you want to do. And you can see we have available BUSD or 5 BUSD. Now this 5 BUSD, we can decide to invest in it in this particular Solana pair, and we can decide to say that this price, we can click on this icon here where we can see the price fluctuations on chart, and we could decide to see with these transactions, or from our technical analysis or from our research, we can decide to bid against the fact that this price is going to drop further from 55 to about 54 or whichever. So it all depends on your crypto analysis and on what your level of research or your level of understanding of how the market is going to work in your favor. So in other case, you want to know that the futures trading is a little bit very risky. It has more risk as compared to spot trading, and one of the major issues, or one of the major factors that makes futures trading very risky, is the fact that it gives you the opportunity to utilize leverages. So leverages gives users the opportunity to amplify their gains as well as amplify their losses. So you could decide to use a leverage of about 10x, which means that whichever direction the market goes in favor, or whichever market directions the price goes, the outcome is going to be 10x in your favor or 10x against your favor. So these are one major concept you want to know. Now, looking at this trade, we're going to initiate a particular trade using the Solana or BUSD. It's currently at 56.04. It's currently fluctuating, moving up and front. So let's say in this scenario you want to invest in this project, you want to take note of the chart and see how the price has been moving these past few days. On the 24-hour high is about $58.15, and also on the 24-hour low is about $52.91. So as a new user, you want to start very small with your investment. So let's say we want to bet against the fact that the market is going to go a little bit higher or a little bit lower depending on this. Now, I do recommend you want to test out limit orders. Limit orders gives you the opportunity to place orders at certain price intervals, which allows your orders to be filled once those prices are reached. You can also decide to go through with the market price, which is the exact market price that a particular asset is. You can buy this asset for those particular prices. So let's say Solana against BUSD pair is going at 55.93. Now, looking at the price charts, for a 1 minute chart, you can also use whichever chart you want to use. And looking at the candles and how the price has been moving in the past few days, let's say we want to push through with a long order. A long order means that if the price appreciates in value, we will be making profit. But if it a sell order shows that if the price reduces in value, we will be making losses. Now you can also decide to close your positions whenever you want to close your positions, and you can decide to leave your positions open, but you want to take note of the fact that you could be liquidated. So this is one of the major concepts about trading futures. Comes with the risk of liquidation, where your assets can be lost while utilizing this particular feature. Now for this 56.0 now, we want to go with short, since the price has been moving in this direction. So we want to say we want to invest $5 in it for the market price at 56.11. Click on short the market. So we just clicked on short the market, and you see that it's a success. We just invested 2.22 BUSD. So you can now see that we invested this, and you can see that Solana Perpetua, or using a leverage of 20x, means the market will be amplified, or our gains and losses will be amplified by 20x in the market. So these are one of the major differences between the sports trading and futures trading. It comes with a lot of risk, and it comes with a lot of technicalities, so you want to be aware. As a beginner that is just starting out, you want to familiarize yourself with the spot trading, and if you want to start trading futures, you want to make sure that you're trading futures with a very minimal amount, which will be less risky for you. So in this particular trade, our entry price is 56.11, and our liquidation price will be at 59.6621. This is our unrealized P&L BUSD. Mark price is at 56.07. So you can see the price and the fluctuations where we meant sell. So if this price continues to fall from 56 downwards, we will be making more profits. But if it goes above this 56 to about 57, we will be making a lot of loss. So these are some major concepts or major differences between the spot trading. Spot trading gives you the futures trading gives you opportunity to make gains even in bear market. So in this situation where you want to close your positions, you can click on close. When you click on close, you can click on close 100%, when you close 50%, or whichever percentage you want to close. So I'm going to close up this trade because we're currently in profits already. I'm going to close up this trade a little bit, as this is just a sample to show you how beneficial the futures trading can be. So I'm closing this position, so we just successfully closed this position. You can see now we now have about 5.12 BUSD. So these are some technicalities that is involved in the futures trading. But for the trade or spot trading, you can decide to bet against the particular asset you want to bet against. We have Luna/BUSD here. It's currently trading at 18713, and you can decide to buy these assets. But one key feature you want to know is that for the BUSD or spot trading, as a beginner, you need at least a minimum of about 10 BUSD or 10 USDT to push through with your transactions, which is a little bit more different from that of the futures trading. Futures trading allows you to use lesser assets or lesser values, since you get access to leverage opportunities. So these are some key features you need to understand. So let's say you want to trade whichever currency you want to trade. All you need to do is to select the pair. So let's say you want to trade for XRP. XRP is currently doing about 2.18% gains on returns since 24-hour volume. So you want to take note of this. Then you can decide to use the limit order, in which you place orders or you provide liquidity to the Binance platform. And once your price which you fixed once the price fluctuates to the price you fixed, your order will be filled and your assets would have been bought or sold. So if you want to also check out for our sell version, you also want to click on the particular assets to sell out this asset. Now the good thing about the spot trading is that it is less risky. It gives you the opportunity to buy and hold an asset, although you can also make losses from using the XRP using the spot trading, but the losses are usually lesser as compared to that of the futures trading. Futures trading gives you the opportunity to use leverages, which could amplify your gains and also amplify your losses. So in a short period of time, if you are to use the spot trading and the futures trading, you get to find that the level of losses or level of profits you usually get access to are usually higher when it comes to the futures trading. Now for this scenario where you want to buy some amount of XRP, you want to hold this XRP for, let's say, 5 minutes or 1 hour. You want to click, or you want to fund your account. Right here it currently says we currently have 0 USDT. So if you have some amount of token, or you want to use XRP/BUSD pair, BUSD is a stable coin. If you have some amount of BUSD pair, you want to transfer your funds from wherever your funds are directly into your spot wallet. You click on transfer. See, we currently have 4 BUSD in our funding wallet. Click on it, click on transfer. So you can now see we now have 4 BUSD. But you need to take note of the fact that for the spot wallet, you need a minimum of about, so let's say we want to buy 4 BUSD worth of XRP. Click on buy. See, it must be greater than 10 BUSD. So these are some major concepts you want to understand. Now, there are some users who would want to buy Bitcoin and hold these amounts of Bitcoin for a long period of time in a bid to make profit. So these are some of the benefits you want to know, and these are some of the basic differences you want to know. The spot market offers a variety of digital assets for users or traders to buy and hold, while futures market gives traders the opportunity to benefit from small price fluctuations in any direction of the market. So guys, I do hope you do understand the basic concept. As a beginner, we do recommend you start with trading on the Binance Spot. You can trade Binance Spot. Make sure you have an account on Binance. You can go over to the Binance Play Store. You also get bonus up to $50 sign-up bonus as a new user when signing up on Binance. Now once you're done with that, you click on verifications to verify your account. Once you're done verifying your account, you can now fund your account using any of the available processes. You can see here we have some amount of BUSD, or we have some amount of funds in our account. We have in our N wallet, we have in our futures, we also have in our spot account. Now the good thing here on the Binance platform is that if you do not want to hold any of these volatile assets, you can also invest in the Binance N, where you can earn from holding the dollar equivalent stable crypto assets such as USDT, BUSD, USDC, and so on. So from these you can easily invest in other crypto assets that are beneficial to you. So this is one way for you to, it's more like your traditional bank system where you get access to invest in a savings account. So in the savings account, you earn interest on a regular basis. So whichever one is convenient for you, and you can also go over to the Binance P2P section to fund your account, or you can make a direct deposit if you have funds in whichever wallet or exchanges you have directly into your Binance account. So guys, I do hope you understand the basic concept about the spot versus the futures trading. For a brief overview or a brief rundown, the spot trading allows you to invest in crypto assets. When you invest in these crypto assets, you get the opportunity to hold these crypto assets for a certain period of time and sell these crypto assets in a bid to make profit. Now, in a situation where you are running at loss from a particular crypto asset that you've held, you could also decide to sell these crypto assets as soon as possible in order to minimize your losses. And also for the futures trading gives you the opportunity to amplify your gains and also your profits. So let's say you are to make $1 as profit from sales in your spot trading. For the futures trading, if you are using a leverage of 20x, 20x times the $1, you should have about $20 worth of tokens in your futures trading account. So this is some of the basic concept, and also the minimum investment needed is usually very little. You can see we're using 5 BUSD here, 20x leverage. You can decide to reduce the leverage if you want to reduce the leverage, or you can decide to increase the leverage if you want to increase the leverage. Whichever one that is convenient for you, you can decide to push through with it. The higher the leverage, the higher your risk, and also the higher your profit. The higher your profits you will be making. So thanks for watching, guys. I do hope you understand the basic concept about the Binance spot trading or futures trading. If you do have any questions, let us know in the comment section. As a beginner, you want to start with the spot trading, where you can buy and hold some amount of Bitcoin or BNB, which is a good currency or a native token for Binance platform. Binance is currently one of the top trading exchange in the world, and this is their native token, so you might want to invest in it. Although, for disclaimer, cryptocurrency trading is a very risky investment, so you want to invest only what you can afford to lose. Make your research, as well as avoid investing too much. So thanks for watching, guys. See you in the next upload. Make sure to use the link in the description of this video to sign up on Binance, where you get access to benefits and bonus up to $50 to $100, as well as discount on trading fees. If you have any questions, let us know in the comment section. Thanks for watching. Peace out, and see you in our next video.